call trade on. But the candidate I'm choosing for my bear call is Amazon. So Amazon is right here. The ticker is AMZN. And what we have is Amazon reported results last week, and it was actually very good results for Amazon. So Amazon blew through, gapped up, but since then it's not been able to sustain the higher levels there. So, right after the initial euphoria, I guess, Amazon has started to come down. And so right now it's at about 225. It went up to a high of about 233. And and so it's come down to 223. So my sense is that this is it's going to be tough to break this one, because it jumped up quite a bit. You can see that it jumped up from 195 all the way to 220. So that was a huge jump for Amazon. And if you look at the past 3 or 4 earnings results, the jump has never been quite so strong. And in fact, this was a down move, and this was a down move. And here again, we have a slight up move, maybe about $10–15, but that's about it. A bear call is a good strategy for Amazon right now. Now, what exactly is a bear call? So a bear call is going to use 2 spreads. It's going to use a long call and it's going to use a short call. Now, as you know, a long call is a bullish position and a short call is a bearish position. So what we are going to do here is construct a bear call spread. So which tells you right away that the dominant position is going to be the short call and not the long call. So the short call means we are going to sell a call option, and that's going to be the dominant option. So then once we sell the short call, we are going to buy a call at a higher strike price to limit the risks of the short call. So what exactly do I mean from here? Now, if you also look at this 1-year chart, Amazon hits a high of 246 right here. So even if Amazon turns around and starts going up, it's going to face this resistance point right here. And you can also see that over here there was some large volumes. And so this is the level of 246 is going to be a good resistance point. So what I'm going to do is I'm going to draw a trend line right there, so we know exactly what we are doing with this trade. And so this, I feel, is going to be a resistance point. So that's at about $246. So if we place our short call above resistance, because even if Amazon turns around and comes towards 250, we feel that this point is going to hold it back, because that's going to be a resistance point. So by placing our short call above resistance, we are putting some element of probability on our side, because we can expect some resistance here right at 246. So that's what we're going to do. We're going to place our short call at the $250 strike price. So what are we saying when we place our short call there? We are saying that between now and expiry, whenever that is, we haven't even come to the expiry yet. We've not chosen our expiry series yet. But between now and expiry, we want Amazon to stay below 250.